Joining us again, Tommy Grisafi, as well as Darren Hudson. Darren, we got a new forecast out this week from Ukraine's ag ministry saying about 20% of the expected spring plantings have been planted at this point. You know, there's still a lot of uncertainty. And as long as we do have this uncertainty, do you think it fuels the market, or actually does it provide more risk when we look at prices today?
I think the answer is risk. There's that uncertainty sort of spills off into people not quite knowing where to position themselves. There's a lot of big players in these markets, the ETFs and others, that are putting a lot of money in these markets. That you put $1 million into treasuries, nobody cares. You put $1 million into wheat, and it tends to move the market. So I think you have to be wary of sort of these short-term price moves and thinking about sort of longer term. The uncertainty in Ukraine certainly plays into those grain markets and oil markets, oilseed markets. But I think over the longer term, we have to think about what happens next. Where are we going to have supplies coming from? How are we going to backfill in some of these situations? And when we pull that volume out of the market, if Ukraine doesn't successfully get a full crop in, you have to start thinking about the marginal impacts of a drought on the high plains or somewhere else. Those start to play a much bigger role when you're working on much thinner margins in terms of carryout.
Tommy, December corn was on quite a run of days that it had closed in the green. So when you look at corn prices today, though, and where they set, do you think that all of the risks that we've been talking about that have been fueling these markets, do you think that is priced in at this point?
Well, we had a heck of a run in both 2022 corn and 2023 corn was mind-boggling, and even 24 and 25 corn for those really brave enough to look at them. So we've had a heck of a run. We're 750 corn. Maybe we're a little lower or higher upon you all watching this, but from where we were a few months ago, I'd say we're a lot more fair and balanced. Could we go to 850 or 9? Yes. December $10 calls traded 24 cents the other day. There's a December $15 call for those who are involved in options. Same thing with beans. We have calls that are much higher strikes and puts that are much lower strikes. So you look at 750 corn historically, it's high. But with what's happening in the world, we've never had this happen. There's no one old enough who ever remembers the last time Russia invaded Ukraine into having back-to-back problems in South America, a drought in North Dakota, Montana, and Canada, and phenomenal demand. There's a lot of people in the world. There's a lot of money in the world, and people were just starting to eat better. And as you and I know, Tyne, we recorded that the day the war broke out. Food insecurity will be a subject. I went to Costco the other day. There was food, pallets and pallets. If you want to run out and be one of those people who think we're going to run out of food, I don't know if we're going to run out of food. I don't think we are. I think the people who need the food the most won't be able to afford it, and that's where the markets are. D's corn 750. We could trade down to 550. We could trade to 950. Be interesting to look back in 3 months and see where we are.
Darren, you had mentioned ETFs, you'd mentioned funds, some of these other players that are in these markets. What do you think would make them exit that we would see prices, really fall to the downside fairly quickly? What factor do you think it would take?
Well, I think in a lot of cases, and I'll speak specifically to cotton, I think one of the things that the ETFs, or at least some of those ETFs are looking at, would be things like export sales. If we start seeing that drop off, that's sort of indicative of the spending demand, further down the chain, especially in Asia. And, if we start seeing really weak export reports, I think that probably causes people to get skittish at this price level, and they'll want to exit. I got to be honest, though, I've had phone calls from ETFs that have asked me questions like, where do they grow cotton? As opposed to highly technical or sort of deep philosophical thinking on those commodity markets. But, it tends to, sort of be a self-fulfilling prophecy or sort of a machine feeding itself, is that once that starts moving in a direction, they all start moving in that direction. And that's, I think, that downside risk that Tommy's talking about. It's there. We're probably much closer to being balanced, at that $1.20 level in cotton, even though there's a lot of unfixed sales out there. I think, what would happen is if we don't plant the cotton crop or it stays dry out here, that's going to trigger a massive upside move. If we start having a lot of rain like we did last year at this time, there's a lot of downside risk in that buck-to-wing cotton. So I think a lot of that is weather dependent at this point, at least in some of those commodities.
All right. Thank you both for joining us this weekend. We appreciate it. Let's